Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It is Monday. It is the 19th of August. Stocks gapping up on the open, kind of drifting up throughout much of the trading day. Closing, most of it happened really early. We did see a little bit of movement to the upside, a little bit of selling at the very end of the day, maybe a little bit of profit takers. Welcome out, David. Ilka, great to see you as always. Welcome out, everybody. Hope everybody had a fantastic weekend and a good start to the trading week. From a bullish point of view, it was a pretty good start. Really hard to find, whenever the market first breaks down like it's recently done, things tend to move a lot together, right? And that's what we're continuing to see. Starting to see a little bit of separation maybe, but today certainly it was one of those gapping up on the open, running and kind of hanging out throughout much of the rest of the day. On the earnings front, not a big one, but we do have Home Depot tomorrow before the market opens. Kohl's coming out tomorrow morning, as well as the TJX companies. Tonight you've got Baidu, no S&P company, so really light. Some interesting names, but unless we're trading those particular companies, Home Depot kind of jumps out to me as one to be keeping an eye out for. But we'll see where that one takes us. And welcome out, Patricia. Great to see you, and hope you had a great weekend. As you can see, kind of got going in the futures market on the open on Sunday, leading into a pretty nice gap to the upside here today. And really just kind of drift throughout most of the trading day. Kind of had a little bit of profit taking to close the day out. Probably nothing tremendous to see as far as that goes. I would guess it was probably mostly just profit takers from folks who jumped in early in the trading day. And welcome out, Adib. Great to see you as always, my friend. Hope all is well. Really not a whole lot technically. We're getting closer to resistance, but until we've talked a lot about it, not just here, but pretty much everywhere, we have a pretty good line of resistance, and that's not been taken out or challenged, at least as of right now, on the S&P 500. Closing in on the top of the range. A break above that, I think we have to look at that as a bullish signal. Until we get that, sure, individual stocks, I've got no problem trading the chart, but broadly speaking, I think we have to be careful from a bullish point of view. Resistance, definitely a battle worth keeping an eye out for. That, of course, as everybody here probably knows, is lining up not just the 50-day moving average, but our old breakout point as well. Pretty important price point, at least in my opinion. Got to get above 29.40 to kind of get thinking, probably for me, probably a little closer to 29.50. So certainly within the realm of it could happen this week. And I think it's probably best that, much like we've been doing, we keep an open mind to bullish trades, be they breakouts or stocks that have held trend, or bearish trades. This has formed into some potential bearish retracements. A lot of great entries probably need a candle or need a doji, right? Sometimes we say, so maybe we need a little bit of development, but not until we break resistance can I think, I believe that the bulls have really reclaimed this. But today, they certainly were the winners. There is no doubt about that. Really similar across the board. Dow's got a little more room to run before resistance, but really the same type of situation here. We've got to get back above resistance. Right now, we're still in the process of making lower highs and lower lows on the Dow, whereas on the S&P, we're at least theoretically, potentially putting in a double bottom. So certainly lagging behind a little bit. And welcome out, Julia. Always great to have you here with us. Hope you had a great weekend. We've got a little bit of room to run before resistance, and moral of the story is everything's kind of moving the same. And we're closest on the NASDAQ. This is, from a movement perspective, something that could happen as early as tomorrow. I think aggressively speaking, you could at least make the case that if we take out the high of this doji, that could be a little bit of confirmation. Tech having a pretty strong day here today, one of the leaders out there amongst a whole bunch of green here today. So in a very interesting spot, we've got this falling 20 clashing with that rising 50-day moving average at that old resistance level. We do have that little tail that was put in here last week as well that, I'm not overly concerned about it, but I wish it wasn't there, right? If I'm looking at it potentially breaking through. And welcome out, Brenda. Great to have you. Hope you're doing well. So we'll keep an eye on, but this one might be leading the way. If we do continue this momentum, particularly tomorrow, we're kind of knocking right at the door for the NASDAQ to go up anymore. It almost kind of has to break resistance, whereas there's still a little bit of room over in the S&P, and in particular on the Dow. And good to see you, Fortino. Always a pleasure to have you here, sir. Hope all is well. Nice bounce back day here in the rut, over 1% here. Not a lot to see, but the support level, this is the big one. We talked about it last week. We talked about it leading into that support level. Just more information as far as I'm concerned, that is the line in the sand that the bulls have drawn. That's how I'm looking at this recent support bounce. We've seen nice price action off of it. We've got a good history coming off of that 1450 to 60 range. So as long as that holds, I'll keep my our old friend the rut here in a sideways range. A break to the downside, we talked a lot about it last week. And hey, Amy, good to see you, buddy. Just not a lot of support, until 14, where we have, of course, a weekly moving average that might be able to prop us up in the form of that 200 period weekly moving average. Really just a whole bunch of clear space between support and that point. Beyond that, really it's the trend or the swing low, whichever one we get to first. So a very important price point. We haven't broke resistance yet, have a little bit of room before we're challenging that. Did close above the 9 EMA today, so a little bit of a bullish victory as far as I'm concerned. But overall, still sideways. The numbers, we're going to have to break one way or the other before we get out there. And I believe so, yeah, 1520 to 25, Fortino, which is going to put us at this swing high. We've seen a lot of weird price action, particularly recently in that 15, 20, 25 range, right? We've seen, act as, intraday resistance, have a really hard time breaking through it. But when it finally did, had some nice price appreciation. So I do think, that's going to line up right around that 15, 20 to 30 range. That's, our swing high. That's our falling 20-day moving average. I just remember how many times we've looked at it and talked and said that 15, 20, 25 range causing it some problems. So yeah, I would expect that to be at least a short-term resistance catalyst for the rut. To break beyond that, I would absolutely call a bullish signal. Still keeping it within the range, of course, but until we break through that, I'll assume that is going to be a pretty darn difficult fight. At least that's how I'll kind of be approaching. So exactly, hey, get back to 15, 20, 25. Those were good days, right? That almost always kind of puts us right in the middle of our wing. So 15, 25 is a good place to be, Russell. If you care what we think, that's probably what most of us are asking for. So there we find our indexes closing in on some resistance. Haven't broke resistance on anything yet, right? So as of right now, we still have failed at support, and in certain cases like the Dow, made a lower low. Other cases held our support like the S&P. So still need to proceed with caution, I believe, until we take out resistance. I do think we should assume that resistance is going to be difficult to push through. Could present, especially if we have kind of a slow doji type day tomorrow, some interesting bearish retracements candidates for us either Wednesday or Thursday. But with the overall candle today, there's always something out there, right? But overall, probably going to need a little bit of development from a bearish retracement perspective. Pretty much across the board, our sectors had positive upward movement today. Not a lot of movement. We did gap on the open, but it was really kind of it over in the material sector. This is an area we've watched as support. It's our recent breakdown point. So this 57.25 range, that does make some sense, at least from a technical point of view. Continues to be a pretty mixed bag. I do still believe a little bit more skewed to the bearish side, whether we're talking, Dow DuPonts or the Dows or the Lins, but we still have SHW, another high today. Didn't really close all that clean, but did hit yet another high. We've got Air Products still knocking on the door of a potential breakout as well. So it continues to be, in my eyes, a mixed bag, still pretty neutral, skewed a little bit to the bearish side for me personally. If we can get back above this range, I think that's just another kind of feather in the hat of the bulls. But really, to kind of get out of this, we almost have to break back above our resistance, our swing high, back here at 58 and a quarter. So a lot of work to do, broadly speaking, I believe, in the materials sector. Still very open to bullish breakouts within the sector, and I'm really, focusing on for setups on those things like the SHWs and the air products that have really held up very, very nicely. Personally, not looking for the sweet deals or the bottom feeding, as Coach Mark would say. They're out there too. Stocks have, some of them have really dropped a fair amount. No real reversal characteristics yet, but working back into a support range on Dow DuPont, old international or international freight. See if I can say that. International flavors. There we go. Still trending pretty heavily to the downside. So very mixed overall, but still, when you look at the ETF, I think you have to keep it a little bit on the bearish side of neutral. And hey, Joe, good to see you, my friend. Great to have you here. Hope all is well in your neck of the woods. Energy was the big winner, and you have to give it its credit today, up over 2%, and it was pretty much across the board. I mean, we really saw a lot of upward movement. And let's sneak in here really quick before I take a peek at some of the players in this space. It ran pretty nicely, outpacing the market. Everything gapped up, but it kind of just outpaced the market throughout much of the trading day. It was a good day for energy. Now, I believe it still has work to do, but as we're going to see as we kind of work through this, let's see where we're at on some of these things. So we still lower swing high over in ExxonMobil, working into that 9 here today. Again, a lot of momentum, but that could turn into a bearish retracement in a day or two, in my opinion, at least. Chevron, still lower highs and lower lows, right? So the big names are still kind of in those downward trends. Some of these companies were able to close above the 9 EMA, which is a little bit of a signal to the buyer side, or at least be cautious on the bearish side, probably better way to put it. But I do call them bullish signals, just not generally speaking, unless they're coming off of double bottoms or something, tradable signals. A little bit more movement to the upside. We've got a long ways to go before we capture trend, though, right? As you can kind of see throughout the names, many of them are looking very like potentially at least bearish retracement candidates, at least to me, going into probably realistically mid-late week. Going to need a little bit of development, because when we look at the intraday chart, we looked at the 15-minute chart, but we can even look, at an hourly chart. We've kind of established some upward momentum, and we don't really have a lot of resistance. Again, we have the negativity of the overall trend, but not really a lot of resistance in our way. Broadly speaking, some of these things have some room to run. Our swing high way the heck up here, just shy of $60 on XLE. So my expectations are pretty much unchanged going into this week. Still looking at an overall bearish, but I do expect until we see some sort of turnaround on the intraday, some sort of a reversal candle, to continue to see a little bit of a rally, at least from a technical point of view over in energy. That is kind of what we're kind of what it felt like last Thursday, Friday, and certainly what it feels like here today. Financials were probably the least impressive sector technically today, and it's we're kind of picking on them a little bit, but somebody's got to be the ugliest, right? Big gap on them open, just like everything else, but really just nothing after that. Quick selling, quick profits. Most of these other sectors, buyers kind of came in that first little bit. Over in the banks and financials, not happened today. They immediately started to sell, flattened out through the day. So not a tremendous bearish candle on the intraday, right? Didn't even break the intraday trend, but certainly when we compare it to other areas, not nearly as impressive. So many of the banks look so very similar to what XLF looks like. Tested support last week, seen some upward movement. Weren't really able to hold their gap here, at least very strongly here today. A lot of work to do, still have a resistance point. We've created lower highs and lower lows. So not much has changed over in financial. Still, I think we have to look a little, lean to a little bit to the bearish side personally. Still mostly neutral, very skittish about the banks, not really interested in them at all at this point in time. If we were, we probably, realistically speaking, should have been thinking about that at support, right? That's not my style by any means, but whether it was JP Morgan or Bank of America or Citigroup, so many of these banks tested support last week along with the ETF. So right now, I think we have to be concerned that they're turning into bearish retracements off of those support bounces. Just like any type of reversal off of support, what I want to see, and whether it's Citigroup or we'll just go to the ETF itself, make it easy on ourselves, I want to see the downward move. I need some selling, right? Then I need the buyers to step back in and take me through that resistance level, right? That can give me some confidence from a bullish point of view. Let those retracement traders have their fun first. So until we're back above 27 and a quarter, and even then we're going to have work to do. And until, I don't know when it will be, but until whenever it is, I still am going to be very, very cautious when it comes to the banks, the exchanges, the insurance companies, the American Expresses. Those companies are still, on my radar from a bullish point of view. The banks, the breakdown would be very interesting, but we're a ways away from that, if that's even what happens. So still, banks a little bit concerning in my eyes, both the big ones and many of the more, the regional type of banks haven't exactly been lighting the world on fire either as of late. Over in XLI, bouncing off of support, kind of stuck in the middle of a range within the middle of a range, right? So we're kind of in a longer term sideways range. Over in the industrials, we've got a lot of history, coming up, about $77. Got a little room between here and there. Got a clear level of support, still shying away for the most part. You guys know me, the defense industry on the table from a bullish point of view. Everything else, I'm open, but it's going to take quite a bit to sell me from a bullish perspective, at least for the time being. Again, another one of those areas that can be, a little extra volatile when it comes to trade war news. So still very overall sideways, a little bit kind of below the midline, if you want to call it that, the 50-day moving average or swing low, and of course all of the history that we have in that, $76 to $77 range. So again, a little bit on the neutral side, not great follow through, much like the financial sector, not a lot of great follow through off of the gap on the open today. We did see some pretty good follow through on the open and off of, really all the movement that we've seen in the last couple of weeks over in the staples as the defensive, the more defensive, I guess, sectors continue to show better. At least technically wasn't the biggest winner today, but certainly probably one of the cleaner charts out there. Continues to be an area of strength, have worked into resistance now. So we're going to have to, either, power through it, push through, consolidate, pull back. Ideally, maybe a 3-4 day consolidation and then break to the upside, right? That might be asking a little too much. Would make sense from a profit-taking perspective, to me at least, now that we're at resistance to, profit preservation, whether it's scaling out, trailing stopped, whatever it might be. Overall, the strength of the trend, I think you have to love. We are at the swing high resistance. We've seen some pretty good movement there. I expect the trend to overall continue, but I wouldn't be surprised personally if it does need a little breather in the form of either a consolidation or a retracement at this resistance level. Beyond this resistance, though, just another bullish signal as the staples continue to show well, as do the utilities. It took them a while, right? When they finally closed above 61 last week, pretty much made it to 62 here today. I guess we weren't the only folks kind of watching that resistance level as a potential, second, burst through, which is certainly what we had here today. Many of these stocks, I mean, you can, pick your favorite, right? We looked at SO last week, kind of sitting on the pullback, moving upward here today. We looked at XEC. No, we didn't. We looked at XCL. I don't know why I'm doing that so much, but I cannot keep those two in my mind. I keep flipping them upside down. So breaking out over an XCL, and this is just a couple. Many more of them are showing tremendous strength. How do you say anything too bad about anything that's breaking resistance, hitting new highs above everything? Just continues to be a very strong sector. The defense just really seems to be a place that traders are comfortable. Some days they're feeling a little bit more risk on than others, right? Some days it's really easy to sell everything, and on those days it's, these defensive areas have been holding up better. But even on strong but bullish days like we saw here today, still very appealing right now to the buyers. Over in healthcare, pretty good movement here today. Now I still believe we got to be very careful with healthcare right now. Not really planning it's bullish, it's bearish, very, very much so on either side of the coin until we get back above that $92 mark, that old floor, that 50-day moving average. But we have seen, at least as of right now, a higher low be put in. We've not taken out that higher high. That's why that break above this 92 resistance level is so important to me. That would be doing it. And kind of the cool thing about it is it can kind of go from, kind of I'm cool either way to this is a pretty bullish signal. If we can actually reclaim this 92, there's really just not a lot of resistance. Once we can kind of get through that, we do need to take out that swing, though, I believe, before we can get to that point. Haven't really done anything yet, right? We've moved, we've shown some good movement the last 2 days in healthcare, but we really haven't changed trend. We're still making lower highs and lower lows over in the healthcare sector. So not really loving the sector either way right now, but that is just me, and I do think it's in a little bit of neutrality with a little bit of, a little more skew to the downside, like many of the more aggressive type of sectors. Good movement here today in XLY. I wanted to take a quick peek here, Amazon, and to kind of talk a little bit about the old K trade. I don't know if it's there yet, but of course, if anybody here is not familiar with the K trade, it's basically we're going to get a signal. Now, ideally, we get pushed down off of resistance. I think it might be a little premature to put something like this into a K trade, but again, that is just me. If we can, develop a nice sideways range, and we all might have a just different opinion on how much time that might take, but if we can develop a very clear floor, very clear ceiling, that's why I think it's going to be most beneficial if we get pushed down for at least a short time period. Then we'll have a pretty good idea of what our ceiling is. Could potentially turn into a K trade sooner or later. We either break into the upside, which would be a bullish signal, or breaking to the downside, which would be a bearish signal. I don't think I would be interested if it were to break this resistance tomorrow, but I could see the argument for it. I could see that, well, we did take out our swing high. You did. We have, held support. You did, confirmed by the break of that resistance. So knocking on the door of a pretty impressive resistance level. And either way, you kind of look at Amazon. It looks like if we break to the downside, not a whole lot of support until we get to our pivot back here. If we break to the upside, especially if we can drag it out for a few days, fight at resistance, get pushed down a little bit, let this 20 catch back up with us. If that were to happen, we really don't have much until the 50, or at least 1880. So we'll keep an eye on this one for a potential K trade. I think it needs a little development. If it just breaks out tomorrow, I'm happy for everybody who might be trading it, but probably won't fit the bill. But if we can hang out a little bit longer in this range and let this 20 flatten down with us, it might be something we could put on our K trade list. And welcome out, Jimbo. I hope you're having a good time in NYC. I saw your picture over on Twitter. Look like you're moving all over the place. Weren't you in Florida like late last week? You are definitely a man about town these days. Hope your trip is going well, my friend. Of course, Home Depot coming out with earnings here tomorrow, so that'll be worth keeping an eye out for. Just a little bit more of the same. Retail, not all that great. Lots of names. So overall, within the discretionary, particularly as we kind of work more into the retail side of it, Amazon, and McDonald's, things like that, I'm not too as concerned about. But this is a big week, as we saw on Friday. A lot of companies within this space, in the retail side of this sector, have earnings this week. So might be an area that we have a little bit more clarity when we're talking at the end of the week, as opposed to early in the week. But as we're just looking at the sector as a whole, so nice. There you go. There you go. Yeah, I could see you being more of a beach guy. So closing above the 9. Now we do have some history at this 118. It was an old resistance level, old breakout point. Probably should kind of keep a little bit of an eye on it. Break above that again. Is this a great signal? I don't really think so, because we've got our pivot just not too far ahead of us. We've got those moving averages not too far ahead of us. So a lot of work here to do, but some interesting charts, both bullish and bearish within this space, and a lot of interesting names. That's kind of what this week is for the most part in earnings. It's the retails, Kohl's and Home Depot and Lowe's. We've got a bunch of them coming up this week. Just more follow through over in the REITs, continue to just show tremendous strength. Did their little 3-day doji dance, pulled back, and then it was pretty much on off of that. And it's it's kind of everything. We've looked at public service here together, continues to drift up. I'm not sure if you're still working with EQIX, but they continue to show well. Prologis, one of my personal favorites to keep an eye out for, trying to break out of, and I think you could probably argue that it did. Any upward movement, maybe some confirmation, trying to break out. REITs are strong, right? You guys do not need me to tell you that by any stretch of the imagination, hitting new highs above everything. The only thing that I will say is once we start to kind of drag ourselves too far away from the breakout point or that 9 EMA, be mentally prepared for maybe a little bit of a consolidation or a pullback, right? I don't think that would be anything worth worrying about personally. At least, I don't think it would look like that. I guess I don't know the future, but showing a ton of strength, I wouldn't want to be bidding against the REITs right now by any stretch of the imagination. And over in XLC, just kind of a day, but there are kind of some interesting charts out here. Much like the market, we've got some room before we're testing our swing high, before we broke resistance. So it looks a lot like the Dow in some ways, a little bit of room before we challenge it. ETF, I'm not a huge fan of. Generally, as everybody here knows. We do have Google, who worked right into that resistance level early in the trading day, got pushed back down off of it, but I think that's an interesting potential break pattern. And I want to zoom into maybe let's try 2 hours, see how that looks here, where we had our pullback, kind of created this little bit of a sideways mess. If we can break through the upside, not a whole lot of resistance. And it wasn't that long ago we broke out on some pretty darn good earnings. So certainly a price point I think is an interesting place at that resistance level over on Google. Over on Facebook, not nearly as interesting. We've got support, we've got resistance, we're dojing in the middle. If you're a bull, you're betting support's holding. If you're a bear, you're betting resistance holding. And either way, at least if your trade's made today, it seems like your risk reward is not going to be that great. So it's kind of stuck in the middle as of right now. But again, a signal either way, we held support, take out resistance, or break support. If we could hang out in this range market wide for a little while, which I don't believe is going to happen, but if we could kind of have the market go in this little range, boy, that'd be a fun market to trade, whether it's, potential breakouts or breakdowns, but also kind of stuff, picking stocks as we're kind of working off of support and into resistance and back the other way. So some interesting things to do in those type of markets. Over in Disney, trying to rally back up. Still don't think this one's quite here, at least from a trading perspective. Still struggling after their earnings, but AT&T really following through. Broke out. These guys were on the report. Not this week, last week, right? I believe it was last week. Broke out and then worked very, very close to where the stop was set up. It was one of those things. If I were staring at it, I probably would have been sweating. But it held. And then really firing through, showing tremendous strength over on T. Also, Ryan got us taking a look at Take Two. Whoops, guess it helps if it's the right symbol. And it's popped, off of that nice support level there as well in a very, very strong trend. Of course, EA on the other side of things, holding support. And I hate EA, as everybody here probably knows, but certainly a very clear support level, developing to a fairly clear resistance level just north of 95 as well. So some interesting charts out there, much like the overall market. We're kind of in the middle right now. So I think, again, case by case, not get too crazy. Be open to both sides, bullish, bearish, trade what you see. Don't go chasing after anything, but be ready. When we get close to resistance or close to support, it can happen tomorrow, right? Theoretically. And so I think we need to be ready with game plans for what that might mean to us, whether it's from new entries or, potentially exiting insurance or adding insurance, or whatever it might be. I think the break of resistance is always one of the best signals, or the break of support is always one of the best signals for us. Of course, on a day like today, market up pretty smooth, gap on the open. The VIX is going to dip down a little bit. Still don't believe that we have enough evidence to believe that we're coming out of this volatile period in the market. But at least for today, traders were feeling a little bit better. Over in our metals, for the first time in a while, on both gold and silver, we actually closed below the 9 EMA. Oh, heavens forbid, right? But that is a little bit of a pullback type bearish signal. I mean, and I use the term bearish very, very light. Obviously, these trends are very strong, and I think it's a mistake personally to be looking at the metals, gold, silver, from a bearish perspective. But we do have the bears in control. As you can kind of see here on silver, sold on Friday, carried through here today, breaking below that. Now, I would love to see how it kind of settles in here as we approach that old breakout point / rising 20-day moving average. So if we can kind of slow down a little bit into some sort of slowing momentum type candles, dojis, hammers, whatever, we could be looking at an interesting pullback opportunity in the metals. But right now, I believe we are kind of in the, looks like, I'm probably not adding to right now. If I'm thinking about adding to, I'm probably looking at a little bit more of a sell-off with kind of the 2-day price action that we have. But I will personally stress that I would rather buy gold right now than go short on it, even though I think it's going to drop in the short term. So I still, much like most of you, most of the coaches, if not all of the coaches at Tackle Trading, I believe all of us, still very, very overall bullish on gold. So a little bit of a pullback or consolidation would be really nice, right? For any new entries, maybe some good, interesting things we can do from a cash flow perspective while we're kind of in this, profit taking. That's kind of what I'm looking at it as. Zone. But again, this has been an area that, that fear steps back into the market. Who here is, especially gold, going to be surprised if there's a giant green candle if fear comes back into the market tomorrow? I know I certainly wouldn't be. So I'd love to see a little bit of price development to the downside, kind of reset for some new entry points. But it looks like going into tomorrow, that's not going to be that day, at least for me. Maybe tomorrow we have a doji and we can see something from there. Over in natural gas, just putting in a little bit of a fight, and we've talked a lot about it for as little as there is to do with it. From my perspective, from a swing trader's perspective, we've talked a lot about natural gas. From a bullish point of view, I think we have to, any conversation has to get us above that 50. I personally believe that, and I think that would be a little too aggressive for me, but that would be kind of taking out our swing high, would be taking out the 50-day moving average. So that would, there would be some slightly bullish signals, or at least somewhat bullish signals, if we were to break through that. On the other side, if we're looking at this as a bearish retracement, just going to have to be patient and let it develop, right? If we kind of zoom in to a shorter term time frame, and this won't be a very good line because you guys know me and I don't draw straight lines the first time ever, but we have to kind of get rid of this trend, right? Right now, we've got a little bit, it's kind of, not pretty on this 2-hour chart, but we have an established upward trend into that. So from a bearish point of view, we kind of need to see some reversal signals and kind of get that trend going back the other way. So if we're looking at this from a retracement point of view, certainly think we need a little development. If we're looking at it from a bullish point of view, I think we've got to take out that 50-day moving average, as you can kind of see here too. That's going to line up pretty nicely with that 9 weekly if we're able to break to the upside. So that is where I will find myself. Probably another week of doing nothing. Welcome out, Adam. Good to see you, buddy. Probably another week of doing nothing on natural gas, but always worth taking a look at. And lastly, over in crude, still hanging around, right? We've seen some upward movement off of that low, more confirmation to me at least. Our sell or our bearish signal is, not until we break this low or until we work into this trend line and see some sort of a reversal candle break above the trend line. I would call it bullish. I still maintain that this is the out of the money credit trading environment for crude oil, not trying to trade it directionally unless you're playing intraday, which I completely changed my opinion. I'm sure it's been great for you intraday traders over in crude as of late, just not a particularly great swing environment. Either way, break of the trend and break of support here, I think would be a signal. And I would expect us to work our way back down into the 50-51 range. If we break to the upside and take out our recent swing high, I would expect some upward movement as well. So maybe we pinch in here a little bit, ultimately break out one way or another, but I still maintain that this is a much more, either a day trader's market right now in crude or a cash flow trader's market. In hindsight, a lot of things should have went bearish, should have went bullish, should have went bearish, should have went bullish, right? In hindsight, I'm picking out all the things I should have done, but in reality, I wasn't doing those things. It probably isn't fair to expect that I would be able to do them with any real regularity either. So kind of stuck in a little bit of a range right now, dealing with these moving averages. At the very least, let's come out of this before we get too crazy one way or the other. But I think you could make a really interesting case that there's kind of a little bit of a pressure cooker going on in this space. And eventually we are going to break and make a decision, right? It doesn't have to be immediately. It certainly doesn't have to be this week, but eventually we are going to have to make a call. Not us, right? We never have to do anything, but somebody out there is going to do something with crude. So, ladies and gentlemen, that is where we find ourselves. Not the start to the week I wanted, in the sense that, I hate when Monday mornings gap up on the open. I'm sure I'm not alone on that end of things. I would rather things not be particularly gappy, because that's just my style. I want boring things. I'm not looking for excitement and action adventure in the market. I want boring and dull. Of course, a giant gap open is certainly the opposite of that. So not exactly the start, not a bad start. Still, the break of resistance, the break of support, those are going to be our this is the next swing, signal to me. So right now we're in the middle. Adam says it best: theta, hang out in the middle all you want. And one thing, and I don't know about you, Adam, but I know one thing that I always strive to do is not be delta weighted on theta, if that makes sense. Having some bulls, having some bears, it can be really easy, especially any given day or any given short period of time where everything's bearish. I want to make a million bearish credit plays, or everything's bullish. I want to make a million. So, it kind of do have to go out of our way a little bit. Well, I do, at least to make sure that I'm keeping a little bit of a balance with that. But yeah, this is, theta would be okay with me all week long within this range. Build up a little bit of excitement for the break either way. Do I think we're going to get that? I don't know. I don't expect it, but I do hope that that's the way it plays out going into the rest of the week. So as always, that's my philosophy, Adam. It's all about, make money first and then worry about making more, is always the philosophy that I take. Take the wimpy trade, take the really high probability trade with good trends and multiple levels of resistance or support, moving averages, to keep that stuff glued together. It only counts if you keep it, right? So that's always my first philosophy. It's a long time ago. First goal is to make money. Second goal is to make more money. I think sometimes as traders, it can be easy for us to try to jump right into second goal with it, just try to skip goal one. And so, because we're all people, we can all do some pretty interesting things. So exactly, Jimbo, make money and then worry about making more, right? So yeah, when it comes to directional trading, the one thing I think, Adam, is we have to, if the market turns at all, I think we take a step back. When the market's in a nice smooth trend, what tends to keep working. But at least where I think most of us get into the most trouble as directional traders is when things are shifting and it's undecided, like the current market that we're in, right? A little tougher to trade this market that was in July, when basically buying breakouts of insurance, breakouts of defense, finding things that are just in nice strong trends and looking for ways in. So it's not to say there's not opportunities. Directionally there is, but I think the easier opportunities do come into play when we have a very consistent trend, when there's indecision in the market. Not only is it tougher maybe directionally, but it's also more random, right? You can have the best trade setup ever, and then good news comes out this morning and gaps the market open, right? So, volatility is not a great swing trading environment, in my opinion, or directional. Let me rephrase that, directional. But that is just me. I am fairly wimpy, as everybody here knows. So, ladies and gentlemen, that'll do it for the recap for today. But as always, it is certainly my pleasure. I appreciate everybody's time. Always great to see you guys. And I do hope everybody had a great day in the market today and a good weekend as well. We'll just kind of work into tomorrow. Right now, it looks like the bulls on the shorter term do have the advantage, but as always, check that futures because that can change things pretty dramatically by the time the market opens up. Keep an eye on those resistance levels on the major indexes. Those should be interesting battles. Breaks beyond them should at least show us short-term price movement to the upside. At least that would be my expectation as we're going forward. So yeah, I don't know about that, but I've been taught to be level-headed, David. I don't know. It didn't come very natural to me, but you learn whether you want to or not. I'll be doing actually the onboarding webinar for our new team members here tonight over at Tackle Trading. So if that's you, I'm looking forward to meeting with you. I'll see you tonight at 8:30 Eastern. So we'll have a good time over there. If you're not, of course, enjoy your Monday night. We'll be picking up bright and early tomorrow with the Traders Lounge over on Tackle Trading. So let's see here. Be sure to join us. You know the drill. Join us here. Subscribe on YouTube. Hit that notification bell. If you do the Facebook thing, join us over there. Head on over to the Instagram and check out the cool things that they're doing over there. I'm not an Instagram guy, but they're doing some pretty cool things on Instagram. It gets me to go there a couple times a week. And of course, you guys know me doing the Twitter thing. So I of course, invite you to join us over at Tackle Trading on Twitter. Me at Frank Martin 23 as well. So absolutely, Adib, I certainly will, my friend. Is your Twitter Adib? Well, just do you have mine? Will you just at me, Adib, and then I'll get you added there, and absolutely be happy to do so, my friend. So just send me a quick message and I will absolutely do that. So just at Frank Martin 23, and then that will make sure that I get it, Adib. I'm not very good at Twitter, but I think that will get that to me. If not, if I don't find you there, I'll see if I can find you I'll find you somewhere. Okay, so awesome, my friend. All right, guys, get out of here. Have a great rest of your Monday afternoon. I will see you all same time and place here tomorrow. See where this one takes us. It'll be interesting to see. Knocking on the door of resistance on the NASDAQ. That's the interesting one early tomorrow if we don't see a gap. At least for me, it is. So, all right, guys, get out of here. Have a great week, great afternoon, and I will see you same time and place tomorrow. Bye, everybody.